our earlier discussion, you mentioned that Indonesia has strongest capital buffer and has a potential of net interest margin potential in the global. But how do you think the potential of credit, do you think it will be slowing down?
We think that credit will remain probably slightly higher. Credit growth will remain slightly higher than we have seen last year. I think last year we're talking slightly above 10%. So we expect largely similar loan growth in the country for 2024. But what's actually interesting is that some banks are pursuing an even more aggressive or higher loan expansion. So I think this is what we're watching carefully. But again, at the system level, we would expect 10 to 12%, give or take, for this year.
All right. Speaking of credit growth in Indonesia, in the midst of the continuing era of high interest rates, is there potential for credit growth in Indonesia to reach 10% to 12% this year? And what are the supporting factors, do you think?
I think appetite for new credit from companies, large corporates in particular, remains pretty strong, right? Again, the economic environment in the country is supportive of credit expansion. We're still guiding for 5.1% real GDP growth for 2024, right? Again, in this context, in nominal terms, that's going to be even higher, right? So I think economic expansion in the country supports credit demand, even though interest rates will be a bit higher.
Right. Do you see the higher interest rate could lower the demand of bank loan in Indonesia?
I think some products might experience maybe slower loan expansion, particularly maybe unsecured credit, products that are very expensive for customers in the first place. So higher interest rates in the country lead to much higher impact on those products. But ultimately, again, the main products that the banks are offering would be, again, a lot of it is corporate, mid-market, mid-sized corporates. I think there we still have really good credit demand.
Okay. So which sectors that do you think expected could boost the loan growth in Indonesia this year?
I think we see good credit demand, particularly from industry like manufacturing, agriculture to some extent. We see a bit of slowdown actually in real estate, but again, that's more of a global development, right? So I would say generally, most sectors of the economy will grow at a healthy pace in terms of credit expansion.
Okay, and what the other sectors do you think?
Well, I think again the commodity sector might do again relatively well if commodity prices come back, right? Again, we have a situation in Indonesia where a lot of the large companies are actually borrowing outside of the country, right? In US dollars. So it's interesting whether some of those borrowings will come back to the local banking market from the offshore dollar market, right? So I think again, if dollar funding costs remain high, maybe some of those corporates will come back to the local market, onshore market.
All right. In our prior discussion, you mentioned that Indonesia has good liquidity. Would you mind to elaborate how do you assess the adequacy of Indonesian banking liquidity at this moment?
Yeah, we look at structural factors and also tactical factors. So in terms of structural factors, we look at how liquid are the bank's balance sheet, like how much cash and securities they hold. And the current level is about 30-35% of total assets are in liquid form. That is a very good ratio. Now, this 30-35 was even higher during the pandemic, again, as banks weren't growing much, but that liquidity level has come down, right? So I think we expect for this in the next couple of years that liquidity conditions will remain pretty good for Indonesian banks. and the liquidity situation will continue maybe to normalize a bit. Again, some excess deposits will fly out or be invested or reinvested by companies and individuals. But again, fundamentally, the liquidity situation is quite good in the banking system.
As we know that several banks in Indonesia have quite flat liquidity. So for this kind, does Moody see that there any potential of rating downgrade?
Well, I think ratings focus on multiple factors, and liquidity is not the only one. So if we see that some banks are managing their liquidity more aggressively, i.e. Shrinking their securities books and increasing their loans at a faster rate, we'll be looking at whether there's any other compensating factors that balance or counterweight this weakening, right? But again, at the system level, we don't expect much liquidity pain. Maybe some banks will indeed run more aggressive liquidity positions, but those will be idiosyncratic cases, again, if and when they happen.
So how does the banking sector should doing to anticipate the uncertainty in this high interest era?
Well, I think banks are very risk savvy, right? So they are good at capturing interest rate risk and foreign currency risk and other risks, right, in their portfolios. And even though the interest rate hike in Indonesia maybe surprised some of the market players, but again, overall, the buffers are still intact, right? As I mentioned earlier, that's capital, that's profit. Those buffers are very, very strong. And I think banks have come a long way from the very high NPLs we have seen in Indonesia many, many years ago. So there's been a tremendous structural shift in terms of de-risking as well over many years, over the last decade, right? So I think fundamentally now the Indonesian banking system is quite strong.
All right. So how does the banking sector could stabilize their liquidity until the end of this year in the midst of a high interest era?
Well, I think, again, I don't think there's a need to really stabilize the liquidity situation in the banks. Structurally, again, about a third of their total assets are in very liquid form and can be used to manage the balance sheet more efficiently. But again, there could be market movements here and there, but structurally, the banks have very strong liquidity. The liquidity coverage ratio is also very, very strong. This is a stress parameter that many banks globally and Indonesia are reporting regularly, and the liquidity coverage ratio is also very, very strong in the country.
Well, with the huge potential of banking sector, can we expect for banking sector in Indonesia to post a higher net profit growth this year compared to last year?
We're more in a stable camp for profitability in the banking system, and by profitability we look at net income as a share of the total balance sheets of the banks. So it's a ratio. So profitability, we mostly expect a stable position. Again, we expect net interest margins to be slightly lower and credit costs to be mostly unchanged from a year ago. So I think the combination of those factors lead us to a somewhat stable profitability story.
Oh, well, so what are the other challenges that should be anticipated by Indonesia's banking sector amidst the challenging of global geopolitical condition and also the higher for longer interest rate era?
Well, we're watching in geopolitics, and I mean, the world economy and the Asian economies are very, very interlinked, right? So we're watching, obviously, the China slowdown, how this can affect many other economies in the region and globally, right? There's always significant trade linkages, right? So we're watching that angle. We're also watching to what extent interest rates, I mean, as a downside risk, if interest rates in the U.S. don't move at all, right? So how did that impact emerging market interest rates, including in Indonesia? Finally, the other thing we're watching is the large foreign currency debt of Indonesian corporates, right? So not everything is hedged on that front. So if for whatever reason the local currency weakens more significantly from now, whether a lot of these companies have buffers, right? So again, those are the key things we're watching for Indonesia.